Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets hidden in plain sight within company filings. Today, we're diving into a report from Service Properties Trust, or SVC. And let's just say they've been busy moving some properties. So, what is the big story here, SVC? Is selling off a bunch of hotels, and this report tells us how that is going and what it means financially. They're getting rid of these hotels to pay down debt, which is a pretty common move for companies looking to clean up their balance sheets. We're going to break down these sales, look at the money involved, and see what the future might hold for SVC. And hey, if you're digging these deep dives into corporate finances, make sure you're subscribed and join our growing community on Discord, linked in the description below. Alright, let's get straight to it. On the 18th of September of 2025, SVC sold off 3 hotels. These weren't T-massive deals individually, but they added up, they sold these hotels in 3 different states for a combined price of about $26.5 million. Now keep in mind, this is before they pay any closing costs, so the actual amount they pocket is a little less, but it is a solid start. This sale is part of a much larger plan to sell a massive portfolio of 113 hotels, which together were valued at $913.3 million. But wait, there is more. On that same day, the 18th of September, SVC also sold 8 more hotels in 4 different states. This batch brought in another $20.3 million, again before those pesky closing costs. So in just one day, they moved 11 hotels, bringing in a total of around $46.8 million. This is a really active period for them. Looking at the bigger picture so far, they sold 20 of these hotels, pulling in a total of $135.7 million. They still have 93 hotels lined up to be sold, with a potential to bring in another $777.6 million. They expect to finish selling all of these by the end of 2025, which is happening pretty quickly. The plan, as they've mentioned before, is to use all this cash to pay down their debts, especially money they borrowed on their credit lines. This is a big financial move, and it shows they're serious about managing their debt. Now, why is this a big deal for the filing? Well, these sales are considered significant dispositions, which means they have to report on them in detail. They're even providing what is called pro forma. Financial information. Think of pro forma as what-if financials. They show you how the company's finances would look if these sales had happened at an earlier date. This gives investors a clearer picture of the company's financial health after these major transactions. Speaking of pro forma financials, let us peek at what they're representing here. They've put together a pro forma balance sheet as of the 30th of June 2025 and pro forma income statements for 2024 and the first half of 2025. These are unaudited, meaning they haven't been fully checked yet, but they give us a snapshot of the financial situation as if these hotel sales were already wrapped up. They've split the pro forma information into 2 parts. Exhibit 99.1 deals with the first set of sales we talked about, and Exhibit 99.2 covers the second set. It is important to note that Exhibit 99.1 doesn't include the financial impact of the second sale, and Exhibit 99.2 does include the first one. So, if you are looking at these, make sure you understand which sale they're talking about. As with any what-if scenario, these pro forma numbers aren't a crystal ball. The actual financial results could be quite different. They point out that things like future changes to their investments, how they manage their debt, operating costs and income from their hotels, and even changes in interest rates can all impact the company's real financial performance. So, while these pro forma statements are helpful, they're definitely not a guarantee of future results. Now, like many companies, SVC includes a warning concerning forward-looking statements. This is basically a legal statement saying that some of the things they say might be predictions about the future, and those predictions aren't always right. Words like believe, expect, anticipate, and will can signal these future-looking statements. They're telling us that actual results might be different from what they expect because of various factors. For example, they mention that these pending sales have conditions, so there is no guarantee they'll definitely happen as planned or on time. Let's quickly touch on what is inside these pro forma exhibits. Exhibit 99.1 provides us with those what-if financial statements for the first significant disposition. Imagine looking at their balance sheet, which is like a snapshot of what they own and owe, as if this sale was already done. They're also showing income statements, which are like a movie of their financial performance over time. Again, as if this sale had occurred earlier. These numbers help paint a picture of the company's financial health post-sale. Similarly, Exhibit 99.2 does the same for the second big sale. It is essentially a separate financial story that reflects the impact of that specific group of hotel sales on the company's overall financial standing. Together, these give a more complete, albeit hypothetical, view of the company's financial landscape after these property transactions. And for those who like to dig even deeper, they include a cover page interactive data file. This is usually a way to make the information in the filing more accessible and machine readable, often used for automated analysis. It's not something most people look at directly, but it's there for the data crunchers out there. Finally, we have the signatures. This is where the company officially declares that the information in this report is accurate to the best of their knowledge. Here, Brian E. Donnelly, who is the Chief Financial Officer and Treasurer, has signed off on this report dated the 24th of September 2025. This shows that SVC's leadership is aware of and stands by the information presented. So, what's my take on all of this? Well, Service Properties Trust is clearly in a phase of actively reshaping its portfolio. Selling off a large number of hotels is a significant strategic move, demonstrating a clear focus on reducing debt. This is generally a good sign for financial stability. It shows they're not afraid to make tough decisions to strengthen their balance sheet. The large number of hotels still under agreement suggests this deleveraging process will continue, and if they successfully execute this plan, SVC could emerge leaner and with less financial burden. However, we need to watch how these sales actually play out. The warning concerning forward-looking statements is a reminder that things can change. Will they get the prices they expect? Will the sales be completed by their deadlines? And crucially, how will the reduced portfolio impact their future revenue and earnings? That is the real question. The success of this strategy hinges on their ability to manage the ongoing sales and then operate effectively with a potentially more focused but smaller portfolio. The risk is that if the market shifts unfavorably, or if these sales hit unexpected snags, their financial health could be impacted. The opportunity, on the other hand, is significant if they manage this transition smoothly, leading to a more resilient and profitable company. Overall, SVC is making bold moves to improve its financial footing. It is a period of significant change for them, and it will be interesting to see how these repositioning efforts pay off in the coming quarters. Alright, that is our breakdown of Service Properties Trust's latest filing. What is your take on these sales and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.